morning, a much stronger than anticipated US jobs report spurred a slide in US Treasuries on Wednesday as traders paired bets on US Federal Reserve interest rate cuts this year. An initial rally in stocks waned amid a sell-off in software companies. Shorter dated US Treasuries were hit the hardest, with two-year yields rising to 3.5%. Money markets priced in the Fed's next cut in July from June previously. The S&P 500 index, which had earlier jumped on hopes that economic strength will keep fueling corporate earnings, was little changed. Most mega caps fell and an index tracking software giants tumbled 2.6%. Bitcoin sank to around $67,000 At the close of trade on Wall Street on Wednesday, the Dow Jones index dipped 67 points or 0.1%. The S&P 500 index fell slightly and the Nasdaq index shed 36 points or 0.2%. The three main Wall Street indexes started the session on a strong note, with the S&P 500 and the Nasdaq hitting their highest level in more than a week after data showed stability in the US labour market as US job growth accelerated in January and the unemployment rate fell to 4.3% from 4.4%. Non-farm payroll jobs increased by 130,000 jobs last month after a downwardly revised 48,000 rise in December. Economists had forecast payrolls advancing by 70,000 jobs, but the largest increase in payrolls in the 13 months reported by the Labor Department on Wednesday likely exaggerates the US labour market's health, as revisions show the economy added only 181,000 jobs in 2025 instead of the previously estimated 584,000. That said, the job gains in January were well above the monthly average of 33,000 in 2025. Healthcare employment increased 82,000 in January, the most since July 2020. Social assistance payrolls increased 42,000. Professional and business services payrolls rose 34,000, and construction added 33,000 jobs. Back on Wall Street, software stocks tumbled again after rebounding in the previous few sessions from last week's tech rout as AI-fueled disruption remained a major concern, with markets quick to punish sectors perceived to be risky. Shares of ServiceNow, Datadog and Salesforce dropped between 1.8% and 5.5%. Intuit lost 5.2%, while the S&P 500 software index shed 2.6%. Interest rate-sensitive financials were lower, with Citigroup, Morgan Stanley and Bank of America down between 0.7% and 3.9%. The KBW Bank Index slid 1.8%. The Communications Services Index was 1.3% lower, weighed by a 2.4% decline in Alphabet, while Microsoft fell 2.2%. Energy shares led gains on the S&P 500 index, up 2.6% as oil prices rose. Energy technology solutions provider Generac topped the benchmark index with a 17.9% gain after its fourth quarter results. In a press release, CEO Aaron Jagdfeld explained that while shipments of home standby and power generators slowed, the company's presence in the data center market grew. Robinhood Markets shares dropped 8.8% after the retail brokerage missed fourth quarter revenue expectations. T-Mobile gained 5.1% following its fourth quarter results. Shares of packaging company Smurfit Westrock soared more than 9% after the company disclosed that orders for its products improved in late December. The box maker said it expects to ramp up its profits by $7 billion through to 2030. McDonald's on Wednesday reported quarterly earnings and revenue that topped analyst expectations as its value push wins back customers. In after-hours trade, Macca's shares were up over 2%. US government bond yields climbed on Wednesday after stronger than expected US employment data prompted traders to pair expectations for US Federal Reserve interest rate cuts this year. The move pushed yields broadly higher, with the two-year, which is most sensitive to the central bank's policy changes, higher by 6 basis points to 3.51%. Benchmark 10-year yields were up 3 basis points to 4.17%. The US Treasury sold $42 billion worth of 10-year notes at a yield of 4.177% into tepid demand. Traders had been bracing for a weak figure after a series of soft employment figures in recent days. Also, some Trump administration officials suggested earlier this week that leaner jobs numbers may also be ahead, so the strong data caught the market off guard. Traders are now pricing in the Fed's next rate reduction in July from June previously. Those meetings would come after the term of current chair Jerome Powell ends in May. European shares closed at a record high on Wednesday. The Pan-European Stock 600 index finished 0.1% higher, having also marked an intraday record high. high. In London, the UK FTSE 100 index jumped 1.1%. Energy stocks in Europe led gains, surging 3.8% to the highest level since 2008. Shares of Total Energies rose 2.7% to levels not seen since 2024 after the French oil giant reaffirmed its commitment to expanding oil and gas reserves, even though it said it would halve first quarter share buybacks. Metal miners rose 3%, tracking strength in base and precious metal prices. London-listed miners Rio Tinto and Anglo American rose 2.5% each. On commodity markets, global oil prices rose on Wednesday as investors worried about escalating tension between Iran and the US, which are preparing to resume negotiations. Limiting price gains, the US crude inventories rose by 8.5 million barrels to 428.8 million barrels last week, far exceeding analyst expectations for a 793,000 barrel rise. The Brent crude price rose 0.9% to $69.40 a barrel, and the US NYMEX crude price increased 1% to $64.63 a barrel. Gold futures settled 1.3% higher at $5,098.50 an ounce as steady long-term buying helped the metal regain momentum after briefly pairing gains, while markets absorbed a strong US jobs report. Base metal prices advanced on Wednesday. Copper futures gained 0.9% and nickel jumped 2.3% after the world's biggest nickel mine in Indonesia received a sharply reduced output quota for this year. Iron ore futures dipped 0.2% to $100.59 a tonne after a raft of lower than expected consumption data highlighted weak demand in China. The Australian share market looks set for a subdued session on Thursday, following a relatively flat night on Wall Street. According to the latest SPI futures, the ASX 200 index is expected to open the day just 2 points lower. In Australia on Thursday, Reserve Bank of Australia officials, potentially including Governor Michelle Bullock, are expected to appear before the Senate Economics Legislation Committee in Canberra. RBA Assistant Governor of Economics Sarah Hunter speaks at the CEDA event in Perth. It's another huge day for company earnings results with AMP, ANZ, ASX, Breville, IAG, Northern Star Resources, Origin Energy, Aurora, Paladin Energy, Pro Medicus, South32 and Temple & Webster all scheduled to release results. ANZ Group, Australia's fourth largest lender, said on Thursday that its first quarter cash profit rose 17% from the quarterly average of the second half of 2025, excluding significant items, supported by lower expenses and improved revenue. The company said cash profit for the quarter ended December 31 was $1.94 billion. Insurance Australia Group on Thursday reported a 21% drop in first half cash earnings, hurt by higher claim expense and lower investment income, and announced a share buyback of up to $200 million. Australia's top general insurer reported cash earnings of $507 million for the 6 months ended December 31, down from last year's $640 million, although it beat consensus estimates for $464.7 million. On the US economic data calendar, the Labor Department will release weekly initial jobless claims for the week ended February 7. On the housing front, the National Association of Realtors is expected to report that inventories of existing homes fell to 4.15 million in January from 4.35 million in December. On Wall Street, Airbnb, Coinbase, Expedia, Pinterest and Rivian all issue earnings results. The US dollar rallied against major currencies including the euro and Swiss franc on Wednesday, following surprisingly strong employment data that suggested underlying US economic strength. The Aussie dollar rose from 70.72 US cents to a fresh 3-year high of 71.43 US cents and was near 71.25 US cents at the US close. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.